everybody, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective each time, asking ourselves what happened today, what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. As far as the broadcasting time, we've been a little late lately. We're trying to get into the swing. We had a big move, so forth. So, bear with us as we get our bearings and get everything back as it used to be. As far as these markets, what happened? Had a nice big day up again. What do we got? Almost 3/4 here on the NASDAQ, the NDX, the Russell. Trailing on the Dow, on the S&P, a little bit less than half. Gold was down slightly, silver down a bit more, bonds up slightly. Nothing big. Really, it was the markets going higher. If we look at those markets and we look at the equities themselves, S&P 500, nice big spike up. This thing has come over 3% off the lows, straight line move. You get that kind of move off the lows into what I suspect is the meat of the resistance. I laid it out last night. As you come up into that area, that's going to be hard to get over, and so usually you're going to see some sort of a pullback. I suspect these bars are probably where it's going to try to get back to, and that's going to set up an ABCD structure to try to take it up and over those highs. So that's the setup. That's the way it's setting up, at least so far. Pull back into this congestion zone, push back over it. If it were a shallow pullback into here, then you'd set up one heck of a strong ABCD structure to the upside. So the question now is, what does the pullback look like and how does it project forward? I do think, unless you get some sort of a total wipeout with everything that's happened in Greece, these markets are going to go to the top of the range. That range has been up there, still is up there, and that's from these highs down to these lows, and now we've expanded it farther, so it's about that amount. 2044, 2124 roughly, so you're talking about 80-point range plus or minus. That's the S&P 500. If we look over at the NASDAQ, now the NASDAQ had been the strongest one on the way up. NASDAQ got over this price point, now goes into the big bar. So let's look at this, because this is the tail tonight here and on the Russell. You go into the big bar, that price point here, you go into it, you get over it, you get back under it, you don't have nearly the same amount of volume, and that's after a big spike up. That's begging for a pullback. If you look at the NDX, now the NDX really came off today. You had Google shooting higher, you had the biotechs spiking higher, and you even had some participation in the stocks. Now this week is earnings. Google comes up on Thursday. You got the earnings on Intel, I believe, tomorrow. You got the financials today, and we'll look at a little bit of that as we get going. But what happened today was NDX gets over this price point, comes back into it and under it, just like the NASDAQ, over, under, less volume, not even close, right, from that quad witching day. That's begging for a pullback as well. Finally, if we look at the Russell, Russell goes up into that breakdown bar, top of that guy, 1273.95, you close at 1273.33. So you go over it, you go back under it, you don't have as much volume, same scenario, same idea, right? This thing also begging for a pullback. So in all these cases, right, actually from there, in all these cases, pullback from the strongest indexes. You've already got your test on the S&P, you already got it on the Dow, you got everything that you wanted. Now you're going to get some sort of consolidation. The question becomes, what does that consolidation look like? If we pop over to the overseas markets, we'll start in Europe. Europe also spiked down, right? Now spiked straight back up. Another one of those V-shaped type moves. It's moved into the area where it's going to try to test into that swing point high. I suspect it's not going to get there. I think it's done most of what it wants to do. The real test was back into these bars over here, and that was in this area from about right there. So as you can see, we got pretty close to it. That to me, you know, maybe you get up into here, but this is ready for a pullback as well. I don't have the volumes tonight, but they weren't that heavy. If we look at the DAX, DAX looks almost the same, does a spike back up, everything looks almost the same. I just don't have the big bars that you're coming back into in terms of volume spikes. Looks to do the same thing to me though. If I look over at Asia, and in particular if I look at Shanghai, Shanghai goes over, back under, but has more volume. Shanghai still wants to get back up and do a bearish retest regen, but it does look to me like you probably are going to get some sort of a retrace and then that push up. Where can that retrace take you? Well, if you take this high volume bottom, that's about 36.53. I wouldn't be surprised to see it make it back down to there. Japan had a nice big spike up today. I thought it was going to come back. It didn't come back. It is in the middle of the range. You got the Japanese central bank making a rate decision tonight. That probably is what moves this market next. If they can drive the yen lower, then of course this is going to rise. Vice versa, it will fall if they don't. Hong Kong, of course, is trading in sympathy with what's happening over in the Chinese market, Shanghai. That one also is setting up for some sort of a retrace. So you got range trades just beginning to set up, big ones in Asia. You got the range trades fairly set up already. I mean, these have been going on for a while in Europe. So if we pull over, for example, the DAX and look at it, this range trade began way back here. It looked like it was going to set it up on that high. You spiked over it and then back under it right away. But that was back on March. We're out in July now. So we've got 4 full months now of trades under our belt. This spike up in the overseas market, Europe, can trade back into these bars from the highs. In particular, this one, that's the March 16th. Low on that bar is 11,787. I wouldn't be surprised to see it try to trade back up into that area. And 11,787, we're trading at 11,5, talking 260 points. If we look at Asia, right, go to Shanghai and look at it on the weekly time frame, you see the same thing. The ranges are just starting to be, they're starting to play out. They've got a ways to go to even catch up with what Europe has already done. And if we look back in the US, right, those range trades on a weekly basis have already been in effect ever since December roughly, and those range trades are already getting long in the tooth. So we're talking about, December when we had this one and then we went slightly higher, right? But we're basically in those range trades still at this particular point. So I mentioned biotechs as a strong sector. This was part of the big move. Gets over the highs, stays over the highs, got the volume. This thing can go higher. If we look at the financials, which got the earnings on today, financials pushed higher as well. They turned around. They were down this morning, turned around. They also spiked higher. They don't have the volume though. I suspect these are not going to make new highs. They're just expanding up towards the top of the range. Elsewhere, if we go back over and look at some of the earnings today, and then also look at a stock that was asked to be looked at, which was Google. Let's start with that one, Google. Google, the question last night, and I didn't get to this unfortunately last night, didn't see it, but the question here was Google a buy? And the reasoning was that it had broke multiple swing points on the way up. 4 of them, in fact, right? Nice big straight line here. When you see a setup like that, nice big stock like this, it is coming into earnings this Thursday, but that is kind of a breakout. If it holds the next day, yeah, you buy it, you set your stop just underneath it, and you see if you can get the run. So the setup was there. Unfortunately, I didn't get to it last night to say that. You also have this spike high over here on volume. Looks to me like this thing wants to spike into this high, maybe in front of earnings before the earnings come out. If not on earnings, but that's probably as far as it's going to go, because if you look at the weekly chart, right, you got those big volume highs up there. Now, they may get the volume this week, right, as a result of earnings, and if they did and got over that and stayed over it, then you can go all the way back to these highs. But you know, more than likely, well, I wouldn't say more than likely. What I would say is that the risk reward now just isn't there. It was on this spike over these highs if you could have caught it. But now you're looking at, okay, what's the risk? Well, you can come all the way back to this bar, it's about 525. What's the reward? Well, the reward probably is this high, which is about 596. When you put those two together, does it make sense? Well, in front of an earnings? No, I wouldn't roll the dice on something like that. So that's Google. As far as the market movers today on earnings, JP Morgan was one of them. They came out, they had decent earnings. No surprises there. They'd already made a fairly good run higher, and today just confirms they're going to go back up and test the highs. If we look at Wells Fargo, which was another one in the same group, big financial money center banks, this one has a little different setup going into that high volume high from June 19th. I think that top will probably hold at about 57. If we look at the other one this morning, actually the one this afternoon was CSX. CSX had a nice 4.5–5% rise after hours, but look at the chart. All they're going to do is get a bounce back into these big bars. I don't know that CSX is going to go all that far. And then finally, if we look at Johnson & Johnson, they came out with earnings this morning. You can see the spike in volume, but really it didn't go anywhere. And if you look at it on a weekly, it hasn't gone anywhere, has a high volume low. I don't think it's going anywhere. So all in all, we've got everything that you'd want from a bullish perspective with respect to a test of those lows, an expansion of the range on the weekly charts, not on the weekly, but on the daily charts, to get to those weekly lows in terms of the range. So here's the S&P, you get the expansion, you get the break of the swing point lows, but all that does is come back in to test the lows on the weekly. It holds on a hammer reversal, and even though it had, you know, heavy volume, about the same actually, it reverses higher and it's going back to test the top of the range. So from a bullish perspective, you've gotten almost everything you wanted from this. So if you are a bull, what you want now is you want this thing to fade back in a little bit, maybe fade into the top of this bar, 2083. I think that's going to be a tough one to get back to at this point. Well, you know, it's 20 points down, or I guess it's a little bit less than that. What is that, about 2083? Yeah, it's 25 points down. That would be a pretty good hit. Going back to the daily chart, you know, more than likely it fades back into 20, yeah, it could get there, maybe about 2080 to 2090. So that range, that's where I'd look for the pullback. That's probably going to be a buy if in fact it happens that way. The only wild card out there now really is Greece. If something were to happen and Greece actually would default, and I don't expect that at this point. So, and that's you know, it's baked in. The Greece deal is done. If that falls apart, then it's a whole different ball game. But I suspect it's not going to. Folks, sorry for being late again. We'll try to get it on schedule the rest of the week. Until then, though, have a great one. Thanks for joining me, and I'll see you next time.